Good. Okay. Remember to turn the recording on. So the first poll is, where are you tonight? So if you don't mind clicking on that, so we can just sort of get a sense where our participants are.
You got a few neighbors from Alaska today.
Oh, well, I've been shaming some of the people. I need you to show up. See, I don't ever vote. So when it says 0, that doesn't count me. But wow, we've got 2 real Alaskans, and maybe, who knows, they might be Hawaii, If
Very,
someone's,
very true.
if someone's from Alaska, unmute yourself and tell me who you are.
Wes here. I'm from Fairbanks. Thanks.
Oh, okay, beautiful. Perfect. Perfect. What's it, like 20 below up there right now?
It's a heat wave here. I think it's about -3.
Oh, only -3. Oh, you got your shorts on, huh? Okay. Yeah, I went to college in Fairbanks, and sometimes in 24 hours it would warm up from like 40 below to 0. And 0 actually felt warm when it warmed up 40 degrees like that. Huh. So I'm going to end the poll. And again, it always amazes me, about a third of our members are they're on the East Coast, which I'm really happy that we get that kind of participation. So we're showing 2 Alaska, 8 Pacific, 1 Mountain, 5 Central, 8 Eastern, 1 Canada, and this time no others. And it says I have an unstable reading, so maybe I should turn my camera off to see if I can get better connectivity. Okay, now let's do another poll. Market exposure. If you could tell us currently what percent you're invested in the market in your investing account. Just give it a sense of how people are feeling about things right now. Okay, I'm going to give it about 15 more seconds. We got 75% participation.
What percent are you invested, Floyd?
What's that?
What percent are you invested?
How much am I invested? Is that what you're?
Let's can't do it.
I'm probably right now 90% invested, but that could change tomorrow. The futures are indicating we may have a down day tomorrow, and I think TQQQ is getting very near a sell signal. So I'm sharing the results here. It looks like the majority of the people are between 40 to 90, and 2 people on margin. So it's a good mixture here. There's 2 people are only slightly in 0 to slightly invested, and then you can see the almost like a bell looking curve here with the majority 60 to 90. Right now, IBD's market exposure recommendation, I believe, is, last time I looked, I think it was 40 to 60%, which has come down quite a bit from where it was about 2 weeks ago. So one thing I wanted to do as part of our agendas, each month I've been showing how a few select leverage ETFs have performed. So you can see this 1-year graph on leverage ETFs, correct?
Yeah.
Okay. So the one that's surprising to me the most is how weak and volatile SOXL has been this year. And as of December 31st, it was down about 13% from where it was at the beginning. Now, the last few days, it's gone up substantially, but for the year, of the ones shown here, the dog was SOXL, and the winner, once again, like it was last year's FNGU. I'm a little surprised to see second place is FAS, the triple up financial, but you can see the results here. This is buy and hold. This is if you bought on the first trading day of January 1, how much would you have gained or lost on December 31st? So strictly a buy and hold. So one thing I wanted to just briefly review, I don't want to spend a lot of time on it, but I know several people are participating in the dollar cost average strategy. And for those of you that aren't familiar with this, we came up with a strategy maybe in mid 2022. The version I came up with was at the end of the month, no matter what the market is doing, at the end of the month, every month you put in $1,000 and you just let it ride. You don't ever sell. And then Eric Reese from the Midwest came up with a variation on that. His version 2 was you put in $1,000 every month at the end of the month, but if the price at the end of the month is lower than the closing price of previous month, or on a monthly chart, it's a pink bar, you put in $2,000. So you put more in on a correction month. And so for TQQ on version 1, for 31 months, you would have invested $31,000, and your total value on December 31st was $67,240. If you sold on the last day of the month, or I guess you don't have to sell if you just check the valuation of it. On the version 2, you would have invested $39,000 because there was a few months that were down months, not very many of those, but you would have invested $39,000 and your total would be $99,727. So that's actually pretty amazing performance. And I've had people sort of over the last year or so have sort of criticized the approach here because they're saying, well, if you just blindly put money in every month and you don't ever sell, what happens if we have, a major market drawdown? And it's a very valid comment. And I think if there's a major market drawdown and the ETF you're investing in, drops well below a 50-day or 200-day, you probably would want to terminate the policy and potentially go to cash. SOXL has been a little more volatile and been under challenge most of 2024, as you can see by the previous graph. And so if you were putting $1,000 every month, your $31,000 that you had invested over the last 31 months would be worth $42,000. The version 2, you would invest at $46,000, and it would have been worth almost $64,000. But you can see the peak. The peak up here was $110,000 back. That might be around June or July of 24, looks like. And all of them sort of rolled up together in a single graph, looks like this. So that's all I had for dollar cost averaging. I'll stop and see if there's any questions about it.
Yeah, Floyd, on the previous two graphs, what were the fine dotted lines at the bottom?
That is just a straight line. That's $1,000 a month, every month for those 31 months. And the red line is a version 2, which I didn't go through and change the up and down, but this shows how roughly, if it was a straight line, how you got to the $46,000 here and the $31,000 there.
Okay, thank you.
So the delta right here between this one and this one and that one and that one is the gain. Or if we look at the other one, here's your delta for the version 1, and here's your delta for the version 2. The strategies, at least for the last 31 months, has been pretty hot for TQQ. So now I'm going to, let me stop and see if there's any other questions. Okay, and this is not something we're necessarily advocating. It's just, it is a strategy if someone wants if they don't have very much time and they want to be invested in the market and they want to just do like an equal or slightly more on a down month, just regular steady investment where their time horizon is they're not going to need the money for 10 or 20 years kind of a thing. So let's go into now, I'm just going to do a real quick presentation here that I've put together for tonight. So what I did is I put together for tonight's presentation, and I said, how does the strategy work where we have our stochastic buy-sell rules versus a buy and hold? So we looked at 5 years, and here is a summary graph of just buy and hold for TQQ, which is the triple up NASDAQ, SOXLs, the triple up semiconductor, UPROs, the triple S&P 500, FAS is the triple financials, and FNGU is the triple FANG index. And so you can see that all of the 5 I've shown, they were all under challenge in 2022. That was a pretty rough year, but if someone had purchased on the first trading day of 2020 and held all the way to the last trading day of 2024 and made one-time purchase and then no buy and sell, TQQ would have been up, the profit would have been up 265%. You can just see the 49, the 153, and obviously the head and shoulders above is FNGU, which is not an ETF. FNGU is ETN, Exchange Traded Note, which is sponsored by the Bank of Montreal. So let's look at how the performance would have been enhanced with the stochastic buy and sell strategy. The current weekly, this is for weekly only, the weekly buy-sell stochastic strategy, TQQ, in those 5 years had a total of 29 round-trip trades. And it's sort of like a theoretical. This is based on simulated trading through back testing, but it shows 1,966% gain instead of a 265% gain. Now, in reality, if you were really trading TQQ for those 5 years, your total would be something different. In some cases, it might have been a little more than 1,966, or in other cases, less. It doesn't account for any buy-ask spread differences or any commissions or any kind of expenses you might have. So, and this is looking backwards, and so looking backwards helps us see a little bit, but this is no promise that if you put $10,000 into TQQ, that 5 years from now your profit would be 196,000. But my sort of thought on that is, well, let's say we only did half as good and your 10,000 became 100,000. I don't think I would be too upset if that happened. On SOXL, this is the one that's the most surprising to me. Buy and hold strategy. Someone have a question? No. On SOXL, on the 5 years, it only returned 49%. But by using our buy-sell rules, we did just a tremendously better 1,400% gain. And again, this is just sort of a theoretical using a computer program to follow the rules we have and do buy and sells. Or UPRO, which had 153% gain, with the buy-sell rules, 955% with 46 round-trip trades. So in 5 years, this isn't very many trades on an annual basis. FAS went from 59.5% to 762 and 37 trades. And FNGU had a pretty large number of weekly trades, 130. And it only performed about 3 times better, but instead of 875%, the gain showing, 2,600%. So the data is sort of summarized on this table if you want to see individual years on the percentages, and here's the individual dollar amounts. And this is the dollar amount for the stochastic buy-sell strategy. So FAS did the worst, but it still returned 762%. FNGU did the best, and this is by no means am I suggesting you should go out tomorrow and buy FNGU. That's not the intent of this presentation at all. And down below is the number of trades and what your money would be like if you just bought it and held it. So for example, for SOXL, if you bought on the first trading day of 2020, on December 31st of last month, you'd only have about $3,200 profit on your $10,000 investment. My conclusion is that from looking at the significant gain in performance by using some fairly simple buy and sell rules confirms for me that the stochastic buy-sell method we have does provide benefit to the investor. The key to all that is if someone wants to follow the strategy, you can't just follow it some of the time, or if you want to go in and change the values of, for example, the trailing stop or when to take profits, that's totally your right to do that. It's just that your performance numbers will be very different. And so by no means is this presentation to suggest that the next 5 years will provide similar results as the past 5 years. In this 5-year period, that included the COVID crisis, which hopefully we never see that again in our lifetime. And so there's a little bit of an anomaly since this includes trading of the year of 2020. So I guess I'll stop and see if any questions.
I have 2 questions.
George, you weren't
Hi, how are you?
okay, buddy. Yeah, what's your question?
The questions is on, I am here. Why SOXL, the outlier, why you had the least amount of trades in the 5-year span, but you had the greatest disparity between buy and hold and doing the 28 trades?
Because SOXL was a more volatile stock.
I mean, when you click, okay.
So if it's a more volatile stock, if you have good buy and sell rules, you're catching the uptrends and you're getting out before the following downtrend. And so you're catching a good percentage of the uptrends and only a small percentage of the downtrends. And so with the stochastic buy sell rule, if you have a more volatile stock and you're able to catch a good part of the uptrends and a minor part of the downtrends, your performance can be really stellar. And so I hope that answers the question, George.
Yes, and the second part is, I'm confused why SOXL has not done that well, considering with the AI boom. Reason?
I have also thought the same thing, and I don't have a scientific or a.
In fact, I thought SOXL would lead.
Well, see, FNGU is a leader, and FNGU is in those FANG stocks. But I think I'm sort of guessing, and I can't back this up with research. But my guess is that the semiconductor companies are investing a huge amount of money in building new infrastructure, and they've got a tremendous amount of capital tied up in construction projects. Once those construction projects are complete and they start producing goods that they can sell, we'll probably see SOXL take off again. But that's only an opinion of mine, because I've asked myself many times, why did SOXL have such a rough year? And I don't have anything better than what I just said. Notice in 2002, SOXL also was the worst performer. And if we go here to 2022, SOXL went down 47% in that 1 year. So it is much more volatile. I mean, here it's up 70, up 271, down almost 50, up 70. It says 49% here in 24. I'd have to go back and see that actually. Oh, the 49, I'm sorry, the 49, the way you get to the 49% is if you bought on the first day, trading day of 2020, and you sold on the last day of 24. I think that's what that one means there. Yeah. Yeah, that's what that one means. It wasn't that isn't the performance for that particular year. Okay, any other questions?
Yeah, Floyd, at the bottom of this screen, I'm assuming those years are off, should be 2020 through 2024.
Yes, that's an error on the, hey man, good catch. That should be 2020, 2021, 2022. Man,
I figured it was a typo.
thank you for saying that. Yes, this should be corrected to 2020, 2021, 2022, 2023, and 2024. Thank you, as shown here. Hey,
Thanks.
I challenge some of you to prepare a presentation like this and let me look at it, okay? Thank you for the comment. Anything else out there before I turn this one over to Gary? Okay, I'm going to find Gary's name. Let's see, where is it? Here's Gary. I'm gonna see if I can make Gary a co-host.
Hey, Floyd,
Yes.
this is Ken. Just a quick comment regarding SOXL. A couple elements for the lack of performance is if you look at the bellwether semiconductor companies, as many of us may know, Intel has really gone through a tremendous pullback and financial challenge over the last couple of years. If you look at the stock price of Intel, they weigh into that. AMD also has pulled back
Yes.
over the last 6-8 months. And then NVIDIA has essentially been pretty close to flat now for about 6 months. So I think those three and Micron to some degree
Yep.
are contributors to why it hasn't performed like we've seen it in the past.
At least as of December 2nd, the largest holding of SOXL was AMD. And NVIDIA was in the third place.
Yeah.
So I think again, this is purely my opinion only. I think with SOXL having a pretty challenging year, we may be on the cusp of SOXL having a great year. And if you're using the stochastic buy-sell rules, I think we've demonstrated that SOXL might be one that could perform quite well. So, Gary, I've made you a co-host.
I agree, Floyd. I think the key would be just keep an eye on those semiconductor companies. And if they start to move up, then I think SOXL is going to do the same.
That's right. And for any of you that are trading Lubbers ETFs, you can go on the internet and you can easily, with almost very little effort, you can do search and you can find the top 10 holdings, and those change. And by the way, some of these ETFs might hold 1 or 200 stocks. The one ETN that surprises me a little bit, FNGU, only has holding in 10 companies. And the last time I looked, the 10 companies were NVIDIA, Broadcom, Meta, Crowd, Google, Netflix, Amazon, and Microsoft. And that could change anytime now, but they're only covering 10 companies. And so they're quite concentrated. Now it's paid off for them. Last year, I think FNGU went up, if I remember correctly, 460%. And on top of that 460% gain, it went up another 150% this year. So the flavor of these ETFs, SOXL, TQQQ, FNGU, et cetera, the way they operate can be quite different. And just be aware, if you're going to trade them, be aware of how they operate. So I'm going to turn it over to Gary. Gary's been one of our speakers now probably at least 4 or 5 times over the last couple of years. Gary and I have collaborated together very closely for, I believe, about 2 years now. And Gary opened my eyes to the power and value of using TradingView, which I've been using now for about.
Hey, everybody. Can everybody hear me okay? Great. My voice is still off, still hacking and coughing, so I apologize ahead of time. Unfortunately, that's the way it is. I'll try not to do too much hacking and coughing, but unfortunately, I think that's going to be part of tonight's presentation. Anyway, so obviously the presentation is going to be on leveraged ETFs for tonight. And I'm going to start with my housekeeping as far as the disclaimer. This, of course, is for educational and entertainment purposes only. I'm not a licensed financial advisor. Leveraged ETFs are very risky, etc. So just take a minute to look at this slide and know that I'm not responsible for anything. So I thought it would be helpful to take a very close look at last year, at 2024, at how some of the leveraged ETF strategies did for the year. And I want to bring at least one really new strategy to you. And I know that Veeva Jahar has been a guest speaker with Floyd, for Floyd last year. And she's also been on IBD Live. She's done a YouTube video with Trader. So I would imagine a number of you have either heard of her or seen her and possibly heard some of her presentations in the past, but I want to delve into her strategy a little bit deeper as part of this for tonight. So I'm going to be looking at 4 different strategies, particularly. Well, it's not really a strategy, but I'm going to talk about that. And the idea here is not so much to compare strategies as far as which one did better than another one, per se. It's more to help you understand some of the different strategies that are out there and available. And hopefully at the end of this, you'll have enough information to understand whether or not one or more of these might be of help to you moving forward with your trading. And if an entire strategy may not be helpful, perhaps some pieces might be. Sometimes you pick up little things as far as like how to do a particular entry or an exit or something like that, or how to apply a certain rule that can help you in your individual trading that you've picked up from somebody else's strategy or the way that they trade. Hopefully there'll be some of that as part of this too. So tonight it's going to be the buy and hold, swing trading with multiple indicators, which is sort of a combination strategy. This is one I talked about a little bit in a previous video that I did that's available on YouTube around best strategies. But tonight I'm going to get into it in a little bit more detail. Veeva's strategy, and then the leveraged edge strategy as well. Like I said, it's not all about performance. The numbers don't tell the entire story, is why I'm getting at. When you look at a strategy and whether or not it makes sense for you as an individual, you need to consider other things. Things like, can you implement it? I mean, can you effectively do the strategy the way it's meant to be done based on when trades are supposed to happen, based on the risk mitigation that's built into the strategy, those kinds of things. Does it fit with your particular trading methodology, with your trading style? Does it make sense for you? And not every strategy is a good fit for everybody. Everybody's got a different style of doing things. So one strategy might be great for one person and terrible for another. Anyway, look at other things besides the net profit, the implementation of the strategy, your ability to spend time working with it, whether or not you can monitor effectively, etc. Can you trade at the required times that the strategy calls for? And Does the strategy give you a sense of risk aversion where you can sleep at night? Or are you going to have nightmares? Are you going to be tossing and turning all night because you're worried about the strategy and what it's doing and whether or not you could be losing a lot of money? So these are all things to consider when you look at a strategy. That and some strategies are very wide based and others are very focused. That's part of the equation too, is the strategy flexible, meaning can you use it for more than just one symbol or for a group of symbols, that kind of thing. So a lot of things to consider. So buy and hold, this is a trading view chart showing buy and hold from the beginning of the year. The green line is the beginning, the end of the year is yellow. One thing I want to call your attention to is that if you're using TradingView, there is a indicator on TradingView called buy and hold calculator, and it's very easy to add to your chart. But the nice thing is it's actually pretty good as far as the results. I did a calculated result to come up with a 64.4% return, the manual calculation type route. And the indicator came up with a result of, down here on the bottom left, 64.2%, let's say. So it's within 0.2% of being within the calculated result. I don't know about you, but I go nuts over buy and hold on TradingView because I get different results from all different kinds of things. So it drives me crazy sometimes. In any case, the buy and hold strategy had a great result for last year, 64%. But, and there's a big but, look at the max drawdown here of 42, almost 43% in the middle of the year. And then there was a couple other times when I was over 20% drawdowns. This is the big part of buy and hold in general, as far as, you don't really know what kind of risk you're going to have during the year, what you're opening yourself up to because you're just buying and holding. And the other is that, particularly with leveraged ETFs, you're usually going to see bigger drawdowns than you will with the average stock. So the drawdowns can be very nerve-wracking and can cause you a lot of sleepless nights, believe me. In any case, one trade, 64% return, not bad as far as a return and net profit. This is that combination swing strategy, and this one has two sets of criteria for the entry and a couple of different indicators it looks at for the exit signal as well. For the entry, it's looking at a bullish momentum that's going to be caused by a MACD crossover and a bullish stochastic, or instead of the bullish stochastic, you could have a 3-day RSI oversold condition with a reading below 36. So it's giving you sort of an either or type of scenario on this, which is sort of an interesting approach. It's a little bit different. The exit signal is generated by the ADX and MACD. So you're looking for a bearish crossover of the MACD. And at the same time, you've got a 21-day ADX that's above 23, which is going to basically tell you you've got a strong downtrend, I think. It has a built-in profit target and trailing stop, and that gives you some risk mitigation. One of the important notes with this strategy, though, is that it says not to buy if there's any sell criteria present. And in working with this, just looking at the past year at 2024, I can tell you that can and does happen. So I had to be very careful when I did this, looking at the individual trades and making sure that we didn't have any sell criteria at the same time we had buy criteria. This chart, I know it looks a little bit busy and there's not much I can do about that, but There are 4 indicators at the bottom of the chart. The 2 bottom ones are focused on the sell signals. So you've got a MACD and an ADX down at the bottom. And then above that, you've got 3 more indicators that are focused on the buy part of the equation, the RSI, the stochastic, and another MACD. So as an example, in the very first buy signal that we have here, we've got a bullish MACD, we've got a bullish stochastic. So we didn't have to worry about the RSI because we had the stochastic condition. And I made sure, based on the readings for the ADX and the MACD down below, that they weren't giving us signals to sell at the same time. And I did that for each of the entries on the chart here, just to confirm that that was the case. But you have to do that because sometimes you'll see the bullish signal with the MACD and the stochastic up here, but you'll have a sell criteria down here, and then you have to kind of wait to get these in the clear, giving you the buy signal without the sell condition, and then do the entry. And that's what I ended up doing most of the time here. Overall, though, this gave me a 45.3% return for the year, which isn't bad. And that's only with 4 trades across the year. The first one gave us a 4% return, 4% gain. It was only about a month long. The second one was actually a not so good trade. It entered and then immediately went into a nosedive, so to speak, but ended up with a almost 13% loss and a 16% drawdown. And that's where we got our max drawdown for the year, was in this trade. The next buy was from May until July, and this was one of the better buys of the year. And this had a take profit signal in the middle of it around June 11th. The instructions that came with this, as far as the initial author, the initial video that I saw that tried to explain how this strategy was done, really didn't get any detail as to how to handle a take profit. You know, if you should sell and wait for the next buy signal, if you should sell a partial and continue with the partial. I mean, there was just nothing with it. So I looked at the condition of the candles here, and based on the price action, decided that it still looked good, and I was going to stay in the trade. So I continued on until I got an exit signal over here, and that gave me a net gain of 32.3% for that trade, which is pretty good. The next couple of months, nothing really happened. The next couple of months were downtrend, a brief up and back down again, and then we had another buy signal in September 11th. Same type of scenario here with a take profit in the middle of this. Same situation though. I thought the candle action, the price action looked good. Decided to just stay in the trade and continue on with it. So I did that up to a new high over here. At that point, it dropped down and I exited based on a trailing stop loss exit down here, and ended up with a gain of 22% for the trade, which wasn't bad at all. So interesting strategy, a little bit difficult, I thought, to follow because of the multiple criteria, but an interesting approach to the way it's done. I need to explain a couple of things about the strategy for Veeva here. And by the way, I didn't say this specifically, but all of these are focused on just the TQQQ symbol as far as these different strategies and what I'm doing tonight. Veeva's strategy is focused on the TQQQ, and she only has 2 buy signals. They are concrete buy signals, either on a follow-through day or based on 3 days up in a row, those being of higher highs and higher lows. and she really likes to see some kind of sign of a character change. To me, that's like volume coming in with the higher highs. But you want to see that the character of the market is changing, or the character of the stock is changing to become more positive looking. And those are concrete signals or concrete buy criteria. And the reason I'm specifying that is because all of our sell signals, all of our sells are clues. They're not hard sells. In other words, if one of these things happens, she doesn't go and sell. In other words, if the TQQ is making new 52-week high and then it starts going into a pullback, she doesn't sell right away. She's looking at all of these as weaknesses that give her a clue that the position she has is becoming weaker, and she will start to gradually peel off portions of her position and sell those portions. When I calculated that 91 or 92% gain that I talked about earlier for Veeva for the year, I had to do that based on a concrete buy this date and sell this date, as opposed to trying to piecemeal it by peeling off pieces of her position. Trying to do it that way would be near impossible to come up with numbers, I thought. I've got no way of knowing, is she going to sell 10% of her position or 20%? So I took sort of a harder approach from the standpoint of looking at numbers. But in reality, she doesn't do it that way. She does it based on weakness, saying, hey, it's time to divest a portion of my position and gradually reduce it until there's nothing left. These are the different clues that she uses to become more aggressive in doing that. One is looking at the new 52-week highs, and is it going to continue on with that, or is it going to pull back? New highs and declining volume, and what's the overall market doing? One of the things that she really looks for is NASDAQ distribution days, because if there's a lot of them and then there's a pullback, she's going to definitely act more aggressively as far as maybe selling a higher percentage of her existing position. If the price gives up a 10-day moving average, if it does that in rising volume, that's usually a pretty good sign of weakness. If she sees 3 consecutive down days in rising volume, another good sign of weakness. Price hitting resistance and getting rejected 3 times. Think of this as 3 waves up in price. So in other words, the price goes up, gets to a high, hits resistance and comes back down, pulls back maybe 2, 3, 5%, then goes back up again. Gets to about that same level, hits that area of resistance again and gets rejected and comes back down again. And then same thing again a third time. Well, after that third time up and hitting resistance and coming back down, based on her experience, she said that it's generally the case that it's going to pull back at that point. She wants to be ready for it. And that is going to be a sign of weakness, a clear sign of weakness for her. And then a poor close and rising volume below the 10-week. She also looks at a secondary indicator, the bulls versus bears. If that goes above 60%, she feels like that's generally a good sign of likelihood of a pullback. And she'll also look at the general market and her other stocks. And if things are getting frothy all over the place, in other words, a lot of excitement, a lot of action, everything seems to be going up, then she might start getting more aggressive selling into strength. But generally, she won't completely exit, at least until price drops down to the 21-day or below. And I know this looks like a little bit of a busy chart as well, but I tried to make it color-coded to make it as easy as possible, with the green backgrounds being the entries, the yellow being the signal of weakness or the clue of weakness, the red being the exits. So I'm just going to go through a few examples here to give you a sense of how this goes and how she thinks through it. But if she entered here, let's say around the beginning of January, and experienced a pullback here, a break of the 10-day, sign of weakness, and then a move back up, and another break of 10-day, another sign of weakness over here, she might be starting to peel back on her position size and starting to sell some of her position. She'd see this drop down below the 21-day here and probably sell a little bit more at that point. If she got it confirming that it's confirmed with another close below the 21-day moving average, she might then sell the rest of her position. She'd see this 3 days up here as an example. Unfortunately, though, this is coming up into new highs as far as this 3rd day up. So she would probably sit back and wait and see what's going to happen in the market a little bit, and wait a few days before doing anything, because it's prime for a pullback. And that's exactly what happens here, is it pulls back and drops down to this new low down here. Comes back up 3 days in a row again and moves up nicely following the 10-day moving average. The green is 10-day, purple is 21-day, red is 50-day moving average on the lines. Comes back, gives up the 10-day again on weakness here. We've got a bunch of moves up in strength here, new highs. She's going to be watching that to look for weakness with pullbacks, which luckily it doesn't do. It just continues moving up, but that's what she's watching for. And that's what happens here eventually, is we get 3 days down in a row, clear sign of weakness, and on higher volume, 3 days down, and the last one is a break of the 10-day as well. So she would definitely be peeling off part of the position to sell. Moving back up again, we've got a number of days of new highs until we get up here to July 11th, where it has a huge down day, breaks the 10-day, and it's the largest down day in the entire move. So that, I think, would be sending alarm bells as far as her seeing weakness in the market and in the TQQQ. And I think she'd be ready to peel off some at that point. She might be trying to peel off here as this is moving up a little bit into strength. And then as this gaps down here, breaking both the 10 and the 20-day lines, she'd probably be exiting the position as a guess.
I have a question.
Yes,
When she does a buy, it's 100% of her position, correct?
correct.
But when she does a sell, she does it incrementally.
She is peeling off pieces, 10% here, 20% there, whatever. And it's really dependent on what the market's doing and what the ETF is doing, the leverage ETF is doing, and what kind of weakness she's seeing. Should be out of the position down here as we're moving down, but getting back in here on these 3 days up and looking for, again, signs of weakness moving up. And we get a situation here where we come to a new high and we have a breakdown below the 50-day moving average, which is not good. And then we get a confirming close below the 50-day moving average. And this is where I think that she would exit the position, is that confirming close below the 50-day moving average. She'd be out of the position through this downtrend here, back in after this third up day here. And again, just looking for those signs of weakness as the stock or the ETF moves up in price, watching for weakness to peel off parts of her position. We get to a point here where we'd exited the position over here, and then we have 3 days up that were like huge gaps. And, to me, I'd be very uncomfortable getting into a position after 3 gap ups like that. So I suggested maybe a 25% position as an entry and trying that, see what happens. And sure enough, the market moves back down again, pulls back. And this is where she gets her max drawdown of about 12% with this pullback here. It starts to come back up, and I think that after it gets to about here, after these 3 days up, she'd probably be filling out the position with the other 75%. And then start looking for the weakness again as it moves up, and finally exiting over here. Again, the bottom line is it's all in and then peel back and gradually reduce the position based on signs of weakness after that. So these are not her trades. These are not the trades that Veeva made last year. She looked it over. She thought that everything that I had done here was very much in line with her thinking and very much captured the essence of the way she trades. So, I think it's a reasonable representation of what she does. And, you can take it from there, but it's an interesting way of trading. And I think it's pretty good based on the results that she's seen with it. She's been involved with the U.S. Investing Championship for a number of years now, and she's entered into it this year as well as a money manager for $1 million up type account. And through November, she was up 52.5%, I believe. But she's had some really good years and has a really good track record as far as what she's done in the market and the gains that she's seen. So you can't beat that when you see success. And, it's the kind of thing you want to try to emulate and try to find parts that you can use that might improve your trading.
Hey, Gary, Floyd, didn't I read in one of the emails that we traded back and forth with Vibra, did I remember her saying she plans on putting out some written rules or doing something in the near future? Did I read that correctly?
She did say that she's looking at trying to enhance her rules. She's looking for how can she improve them, make them a little bit better. That's what she's trying to do now.
Okay, good. I think many of you that were with us remember she spoke to us about 10 or 11 months ago, and she might be a candidate for another time with our meetup. We'll see. We'll see if she'd like to do that again. Thank you, Gary.
Yeah.
I have a couple questions.
Oh, sure. Go ahead.
How long has she been doing this trading for TQQQ?
Years. She's been doing it for a lot of years. She didn't say exactly how many, but it sounded to me like it's definitely more than 5, but less than 20.
Okay. Well, yeah, it has to be less than 20. But has she ever tried incorporating where when she gets a sell signal to get out of TQQQ, instead of going to cash, she goes and hops into SQQQ and then vice versa. So she's basically, it's a light switch. You're either in one or the other, and you're virtually never in cash.
She has not mentioned that. I've never heard her mention anything like that.
Thank you.
So you could ask her at some point, but I've never heard her mention anything like that.
How do you get in contact with her?
I guess through Floyd, probably the best thing.
Oh, okay, thank you.
I wanted to point this out too. One of the other things that she's starting to look at more is this is a weekly chart, and at the bottom of the chart here, I have an indicator that's called distance from moving average. And I have this set right now for the 10-week moving average. So these bars, the higher the bar, the further the price is from the moving average. So this can give you an indication of when you are getting to extremes as far as being extended, your price being extended from the moving average. So there are a couple of cases here where it was very obvious that you should be looking at, based on where the bar got you down here, starting to look at selling some into strength up through this portion here. And in that last part, and I think you remember in the prior chart here, where we got up at the top here, definitely selling into strength there. Based on this indicator, it's a good tool to give you that sense of when it might be ripe for doing an offensive sell. And that's one of the harder things that I think there is in this business as a trader, is knowing when to sell into strength. Selling defensive is easy. You know, you're selling to avoid pain. You're selling to keep the profit you've already got. But selling into strength is hard, and much harder to achieve, and doing it with good timing. And this is a tool that can help you with that. The last one is the leveraged edge strategy. This one for 5 trades had a return of a little bit over 63%. Max drawdown of 17% versus a buy and hold of like 42%. This was the weekly hedge strategy setting. Included the additional indicator, the MACD, to help boost it a little bit. Had a trailing stop setting of over 35% and a prior day stop almost 13%, with a profit target of 33.6%. So here's what it looks like. Now, this is another case where I had to configure things a little bit differently than I usually do. The weekly strategy was already in a trade. It was still mid-trade based on an entry in 2023. So I took the point where we started 2024, and I used that as a beginning trade entry, even though it was a trade that had actually been entered in previously in 2023. So I used that as the starting point for the calculation, getting the return. And I ended up I was going to do the same similar type thing at the end, but that's right. We were still in the trade at the end here. I ended up closing the trade out at the end of the year, but the trade was still going into 2025. And that's what Floyd referred to earlier tonight as far as the weekly getting close to a signal for exiting. But the first trade had a 24% return roughly from January through April. We had a cross under range exit when we would sell. We missed this drawdown here, got back in here with a new buy. This trade had a 35.5% gain until it got up to a profit target reached and a sell and a re-entry buy. And then another small 1% loss by the time it went up here to the high and came down to a cross under range exit. It's about 1% loss. This is where we got our max drawdown, where it came down about 17%. The next trade was from September through end of October, 5.3% gain. And then the next a buy here. This is the beginning of December to the close at the end of the month, and that was for about a 1% loss. So overall, like I said, about a 63% gain, 17% drawdown, and 5 trades altogether. Some of the advantages with this kind of strategy, though, is that it does work with multiple leveraged ETFs, which is nice. So this works well for not just TQQQ, but FNGU, SOXL, SPXL, UPRO, FAS, etc. It comes with settings to help you maximize the profit potential. So we've already kind of predefined some settings for you to use and try out to start with. Traders can adjust and make changes to fit their trading style, because everybody's got a different style. We recommend using alerts to give you signals for when things are happening. And it's very easy to do back tests with this strategy to help make sure that, number one, you've got the right settings in the first place, that you put them in correctly. And number two, to help you understand what the strategy is capable of doing and to see how it performs in different types of market environments. There's more training available at the website, leverageedge.com. It only works on TradingView. It's the only platform that you can operate this strategy on. And a number of the people in this group have been very instrumental in helping with the beta test process as far as pointing out over the past year in 2023 any kind of issues or problems they saw with it. They gave me an opportunity to fix those over the past year. I did a slide on resources too. So on any of the stuff that I've shown here tonight, if you'd like to get into additional information, including the name of that buy and hold indicator on TradingView, here are the links for it, and you can get more information. And I encourage you to look into some more of this stuff in depth. Okay. Any questions?
Gary, could you go back 3? I think it was 3 that showed the criteria, the in and out criteria, the buy and sell
For which?
for this one or for the last one. 3 slides back, I think.
For this one? I mean, are you talking about here?
Yeah, that's what I'm trying to, I think so.
Okay. I don't have all the criteria up here. I was just trying to give you a sense of what some of the settings were, but it's the basic TQQQ weekly setting that we use in the best settings spreadsheet.
Got it. Thanks.
Sure. Any other questions?
Well, thanks a lot, Jerry. I really
All right.
appreciate the presentation. And I personally have been using this strategy for TQQ and SOXL, and it's been very successful for me. I'm sold on it. But one thing I would let you know is Gary and myself and others, we're always looking for ways to improve the strategy. And if anybody is using an LTF strategy and you have come up with a way to improve it, please share it with us and we'll share it with others. One of our beta users, I believe, is the one that came up with the suggestion to use MACD as a secondary indicator, and it really does help enhance the performance. And what it does is it typically helps us avoid buying losing trades that we otherwise would have been doing. So, in the interest of time here, we're going to let Hailey go with his presentation, and I think I still have you as a co-host. You're still a co-host, so you can take over and drive the boat.
Hey, Gary, I did have one more question about that LETF strategy. It was, the indicator that pops up on TradingView, does it just pop up as like a buy signal and a sell signal? And how do you start peeling off on the sell signal? Is it like a sell 1, sell 2, sell 3?
It's basically it's a sell all. Okay. It's a buy 100%, sell 100%. All right. Now, that's the thing with the strategy is that it's very flexible in how you decide you want to use it. But the strategy is set up so that when we sell, it is 100%. Okay. One of the things that I'm going to be talking to our members about later on this month is the profit taking. So we have a profit taking rule, and basically we sell 100% at that point. And then if the conditions are still favorable, we'll get back into the trade at 100%. And believe it or not, most often that improves our trading result. And it's strange, but that's the way it works out. And part of that, I think, is because a lot of times because we get in at the close of the next day, and that time difference, the price just tends to fall back or pull back a little bit to give us that edge as far as a greater amount of profit doing it that way. But what I'm getting at here is that I want to have discussion with our members about the profit taking part of it. And, look at some different ways that we might handle that differently. You know, taking partials as an example. Okay.
Makes sense. Thank you, Gary.
Sure.
Okay, Haley, you're driving the boat here.
Everyone can see the PowerPoint presentation?
Yep.
All right. So my name's Haley. I'll be the future IBD Anchorage meetup leader.
Yep.
As Floyd starts saying vaccine in the future, but for now, Floyd's still in the lead. So what I'm going to talk about today, wait, disclaimer first. I'll read this out loud. The information presented is for educational and informational purposes only and should not be interpreted as investment advice, an endorsement, or recommendation to buy, sell, or hold any specific securities. I am volunteer and not paid for this presentation. Investing carries significant risk, including the possibility of substantial loss. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making any investment decisions. Neither I nor any associated individuals accept liability for any investment decisions based on this information. I am a full-time investor. I don't have a W-2 job. I don't do this on the side. I do invest in multiple different investment asset classes at the same time. So stocks is one of them, real estate's another, and also some venture capital and some startups too. I started trading, my first ever stock I traded was JDSU, which was probably about 20 years ago for me. So the topics we're going to cover today is going to be a quick, about 20-minute presentation. I'm going to cut it a little bit shorter, so we're going to have more questions during and at the end too. So feel free to unmute and ask questions at any time. I'll talk about the notable stocks of 2024, which of course includes NVIDIA, some economic factors that's going to shape the economy, because I am an investor and I am trying to predict where the economy is going to go and how I can profit off of that. And some 2025 stocks and ideas that I kind of like. And one of the ones that people are talking about is nuclear energy. I'm an engineer at heart, so nuclear energy really excites me. So there's 4 notable large cap stocks with big runs that fits the can slim criteria. So the 4 that I'll be talking about is NVIDIA, SOXL, Carvana, and MicroStrategy. You guys already know NVIDIA hardware, great hardware for especially the AI revolution. And it really broke out in the beginning of this year when at CES, Jensen said, hey, we have really good hardware for AI, to just summarize. Then the next stock I'm talking about is SOXL. SOXL, it's really about an earnings breakout. It's that, hey, earnings guidance came out, it was forming a base pop, and you could have made 200% gains based depending on your sell rules. And these gains are all based on canceling, where it's a cup and handle, it's a break with a high volume off the 50-day moving average or the 10-week moving average. Very basic stuff like that. You could always optimize, make little rules and differences for yourself as you see fit according to your personality. Carvana, 200% gains. Why this one really broke out is because, hey, they finally made money. That's why in the beginning of this year, in February 23rd, they really started shooting up and could have made at least a 200% gain. And MicroStrategy, if you guys haven't heard of cryptocurrency, please tell me where you live. It sounds very peaceful and quiet. So MicroStrategy is pretty much trying to become the Bitcoin treasury reserve of the United States. They're literally using all the money that they're gaining from their business and buying more and more Bitcoin. I think the latest news I heard, please correct me if I'm wrong, it's that there's 43 billion that they're going to invest more into Bitcoin. We'll see what happens there. I'm not going to bring up NVIDIA chart. I think we're all pretty familiar with that, but it's just almost a buy and hold. And as some of you guys know, NVIDIA has done very well for me. I think I'm in 4,000% profit right now. And I did sell about a fourth of my position. So, SOXL. When did this break out? I'm actually going to take, this is way too small and I cannot see these graphs very clearly. So I'll bring up market surge. It broke out on August 8th, 2024, and it made 200% gains. On the daily chart, which is on the center chart right over here, if you draw a left side high at the $100 sign all the way to the right, you see a breakout on high volume. So even if you take a kind of a step back distance view, which is what we're looking at right now, you can't tell something's going on here, here. There's these towering sky towers volume that's happening. And someone's coming in and buying. It's not me and you. Maybe it's Floyd with his with his Alaska money and his oil money, but who knows? But as we see on the breakout, which we see happen right at this $100 mark, it just kept on going up. It's going up until it starts to see, what is this called? It seems like an exponential rise. I forgot what was the IBD term. It's the exponential rise where it's like, hey, this is now a hockey stick and it's broken out of this channel lines. And it might be a sell point here. Or if there's another sell rule, it's a large volume break of the 10-week moving average and can sell here. And that's where I calculate 200% gains. Oops. That's where I calculate 200% gains right over there. It could change. You could have made a little bit more if you said, hey, you know what? I made over 300% gains at $400. That's enough. And you could have sold it at the top here. But hey, 200, 300, it's still it's a good chunk of change, especially if it's a sizable position. So Carvana, this guy, mainly in the beginning of the year, made about 200% gains. Let's see how. So I said it was around February, so that's December, that's January, so right around here. I heard someone say it in my head, it's a cup base. So in this cup base, we're gonna take a look, right? We're gonna go down on this little dot. We see this high volume breakup on the, oops, that's the weekly chart. My apologies. I'm looking down, I'm like, I see these weeks. So let's look at a daily chart. We see the cup hand. We see the cup right over here. This is a very sad day to see. So I'm gonna exit this presentation and I'm gonna go to market search.
We want to find those stocks that have huge current earnings quarter by quarter.
Yes. So
Now let's go on the annual earnings. So we want to make sure we're looking for these companies that have a great track record throughout many years. This is a very important indicator that should not be missed when doing your research. Ideally, we like to see at least a 25% annual growth 3 straight years.
that is very true.
The reason that these stocks have these great track records is because they're doing something better than their competitors. These companies have great management in place that helps them with their annual growth and the return on equity and then their products. So ideally, we want to see a positive annual growth for 3 to 5 years when researching our stocks in our database.
Yes.
So let's go over another quote from Bill O'Neill, very important. So on page 186, for those who want to follow, he says, don't just dabble in stocks, find what you like for whatever reason. Dig in, do some detective work, and find out what makes some stocks go up more than others. In other words, as growth investors, you do not want to be buying stocks because of just the technicals or just because it broke out from the pivot. Right? You want to find stocks that have that strong story. So this leads to the next topic, the N in CAN SLIM, which stands for new product, new service, and new management. And of course, a new high, but that'll be focused on like the lesson 3 and 4 of research. So you have to ask yourself these questions. What are these companies doing to innovate, to change the lifestyle of many individuals around the world? So let's go over a company that we might be familiar with. I'm going to go over a case scenario from the 1980s to the early 2000s. Most likely, this is a product that you're watching currently, be an iPad, iMac, iPhone, right? And the stock I'm talking about is Apple. So in 1985, one of the co-founders, Steve Jobs, departed from Apple after there was some disagreements with the board of directors. So what happened is Steve Jobs goes on and creates his own company called Nets Computers, and also a famous picture animation studios company. So it's now owned by Disney. So during that time, if we forward 10 years later, Apple is still struggling with the absence of Steve Jobs. During that cycle, Apple has gone over 3 CEOs since when Steve Jobs left. So what happens in 1996, Steve Jobs convinces the current CEO, Gil Amelio, at that time to buy his company, that's computers. And then in 1997, Apple bought Steve Jobs' company, and that's computers, and they put him as CEO in 1997. So during that year, Apple was about 90 days from going bankrupt. You can see it in the chart. Like, I know it's the price has split it 5 times, but they were 90 days from going bankrupt. So what happened? Steve Jobs goes to Microsoft. That time it was Bill Gates, right? And asks for a buy on the stock. So what Microsoft does, they invest $150 million, and this is what saved Apple. Otherwise, we wouldn't have these products like iPhones or iMacs, right? So at the end of 1997, the market cap for Apple was $1.5 billion. And this interested Wall Street because with the help of the investment. What Steve Jobs did is in 1998, introduced the iMac. And this is where Apple got its
third story.
You see it was in 1998 to the early 2000s. Now, yes, the iMac was a good seller, but in September of 2000, and we know why, the stock dropped over 52% in one day because of the negative earnings. And the reason we know is because this was during the .com bubble crisis in tech stocks. However, Apple survived, and in 2001, Apple started going from the computer to the music business, and they released the Apple iPod. At the end of that year of 2002, Apple's market cap was around it took a while for consumers on Wall Street to be interested, but in 2004, as we can see, Apple broke from a base, and it went from $4.4 billion to a $24 billion company. And we quickly fast forward to 2007, when Steve Jobs announced the iPhone, and this changed the world, right? It changed the way we interact with people. It replaced the digital camera, the camcorder, the GPS device, music player to one device. And it changed the stock market out there. But also what Apple did a few years later, they introduced a new service called the App Store. 2007, they didn't have it. It was maybe like YouTube, Google, and those spaces. But
Hey, can you hear me?
a few years later,
Yeah, I can hear you, Hailey.
it's called the App Store.
Oh,
and
Rick is talking.
it's developers. And
No, I'll just say I can hear you.
percent of the commission sale,
Who's
this
talking
made
right now?
stock go up.
I don't know who's talking right now.
I am trying
When the iPhone was
find
released that
person
year,
to mute.
it was $64 billion. The market cap was at 151.
Just joined.
Whatever he did.
That was my market search. I'm sorry, guys. I don't know why market search.
I have no idea who was talking.
What the heck was that? My apologies, everyone. I was trying to figure out what was going on.
That was you?
No, that wasn't me. I'm like, I was trying to get it was saying I was talking, but I was trying to stop whatever was happening from talking.
And I looked at all the attendees, and all the attendees were muted.
Did my computer get over or something? I was like,
Either
talk about this needs to stop talking about Apple. But it was related to Can Slim initially.
it was some
Maybe you're an AI robot.
I was going to say maybe your AI took over.
Which AI tools these days?
Yeah, that got you there, Hailey.
Yeah, definitely got me. I think I'm using too much AI these days.
At first, I thought you were talking, but then I saw your lips weren't moving.
Exactly. That's all I could tell too.
Well, that was actually a pretty cool story about Apple. So it is true that CanSlim, you do want 3 years annual earnings of 25%. So that is very true. Whatever happened there until we start talking about Apple in 1997 to 2000 to 2003. Different story. So let's look at different economic factors that was shaping up in 2025. And let me full screen. These are factors I look for in 2025 market. It's inflation, tariffs, unemployment, and industrial production. Inflation really does matter because what we see in 2023, it really shot up. Jerome Powell was like, let's tame it by increasing the federal fund rates. And it really worked. And now we're kind of on this downward slope, but lately in the past few months, it's kind of slowed down and it's even going up ever so slightly. So I'm really keeping my eyes on this because if this happens, maybe the rates cuts will reduce and there'll be less spending power inside this economy. Although the caveat to this is the US dollar is really, really good in the whole world right now. Tariffs. Tax in his business plan when he was elected president said, I'm going to tariff everyone. There's going to be 20,000 goods that I'm going to tax people on. Jess says she can watch high yield credits too. So yes, you can definitely watch the high yield credit spreads. And in the past, have you guys heard of the Smoot-Hawley Tariff Act? The economy was pretty much started at a recession already and was in the beginning. And the Smoot-Hawley says, hey, I'm going to tax my neighbors, the world. What ended up happening is it made up the recession worse because it made the cost of production for every single company a lot more. People didn't want to trade for the US and just nobody won and just kind of brought economics to a halt. The big summary. Is Trump going to increase tariffs? I believe no, but if he does, watch out. Things might go very volatile. So if you're a swing trader, beautiful. If you're a long-term holder, get ready to hold onto your seatbelts. Next thing I look at is industrial production. I look at two of these charts. I look at percent of unit size utilization, which we see on the top chart, which is right around 77%. Ooh, lucky sevens, right? So we still see that we still can increase our economy a little bit because if we're at 100% capacity in industrial production, we have to spend a lot more capital to grow even more. So we still have room to grow and we're still investing into the economy. Like other people have said in the chat, Arizona is one of the prime states that people are looking at to make semiconductors right now, TSM, to just name one. The second one, I look at percent change. Right now, industrial production is getting into the negative range. So there is less and less industrial production that is going on. So that's okay. It's only in the single digits, like 2s or 3s. So I'm still not worried about it. But it starts dropping really down and industrial production goes really down. So now we get another spiel about Microsoft instead of Apple. So unemployment, right? Why this matters is because if people have jobs, companies have money, and people will spend money. That's it. If unemployment creeps up above the magic number to watch for me is 5%. If it creeps up above 5%, oh boy. And I kind of breeze through the other stocks. So stocks and ideas to watch out. There's 3 major ideas I really like right now. I like quantum computing because it can literally beat out any supercomputer that we have. And probably machines will be smarter than us because they'll finally have brains bigger than ours. AI companies because it's currently helping productivity of each individual workers. And when productivity increases, earnings for companies typically increase. Nuclear because energy is needed to start of every single bull run, in my opinion. Because if you don't have the energy, you don't have the electricity, the gas, whatever the energy is, which is nuclear this time, you won't be able to power all these power hungry things. You won't be able to power quantum computing, the AI companies and everything. So these are the 3 big ideas that I'm looking towards right now. And I'm sure some of you guys already know they just got slapped in the face just before the market was closed yesterday. So it's like IonQ is down like 20, is down 30 or 40%, some huge number. So that is pretty much my presentation. Is there any stocks you guys would like me to look at? Is there anything you would like me to elaborate inside the presentation? Let me know.
Yeah, can you say a little bit more about Apple? No, it's Floyd. That was just
Yeah,
unemployment come out tomorrow?
it does. It does.
I don't believe anything that comes out of Washington. They're always revised upward anyway later on.
It's like that's pretty true. So I do care about it because other people care about it. How much I believe it doesn't matter. Like I always believe that my opinion does not matter. It's what other people think that drives the market. I don't drive the market tells me what to do.
Right. It's the reaction of the market that counts, whatever the numbers are.
Yep. And it comes out at 3.45. Oh my God, it increased. Okay. How does the market react? Sometimes we all see news where it's like when Trump got his first presidency, it was like when we're looking at sorry, what is it called? Pre-market numbers, we're like, oh my God, this is terrible. NASDAQ is down 1%. By the time market opened, nothing. It was like up even 0.1%. Just absolutely insane how the stock market is.
Part of the problem that was occurring on the election night is it being relatively thinly traded. But yeah, we were watching it this last time around, and you could definitely tell as the states were coming through.
Yes. And it was good. As the seats were coming through, it just kept on looking more green and green. I was like, don't say blue or red, right? It's more green and green. Is there any?
Well, I
Yes.
hope we have a good IPO market.
I am an IPO fanatic, and I really hope so. I've been waiting for something to come up for what it feels like years now.
Yeah, Stripe and Databricks.
Okay, I'm gonna try opening up Market Surge again.
OWL.
OWL. Let's look. So this is how I typically open up. I like seeing who's owning it. Columbia. Beautiful sales, beautiful earnings line, beautiful consolidation. Is there an N factor? Doesn't seem like it. Earnings are going up, so it might be consolidation into a breakout. Let's look at the daily chart. It's getting lower highs, lower lows. That might be okay. But we don't want to see this keep happening. We want to see it poke above this previous high, then poke above this previous high to see a breakout. Overall, fundamentals look pretty good. Yearly earnings looks pretty good. Fund manager is great. Comp rating, it's 98. Yeah, definitely a stock to watch.
Yeah, look at that green earnings line.
This is phenomenal. And it's been going on since like 2 years ago. And sales are increasing along with the earnings. It's quite sexy. Quite sexy of a stock.
What about NU?
And you. Whoa, what happened to you? What the heck?
This is one supposedly, at least as of a few weeks ago, I think Warren Buffett was heavily invested, but I don't know if he still is.
Yeah, they're making big strides in several countries in South America.
And this used to be the darling a few years ago because Warren Buffett invested, then it just never popped above the IPO. Consolidated, has a huge run up. Could say that's a failed breakout. That's another failed breakout. That is not breaking out. So let's see what happened last time it broke down and lived below the 200 day. Consolidated and went to another kind of a run. Not really a high flyer, it looks like to me though. Is it in a good industry? Yeah, decent. 45. Oh, checklist is 100%. Oh, because I'm on Universe. Not bad. This doesn't really matter because it's just living below the 200 day. Any other stocks?
One that is previously was a high flyer, but it's been under a little bit of pressure is FTAI. No, FTAI, This one is done as well as NVIDIA, I think, and many other high-flying stocks. And here it is engaged in aviation leasing. Look, back in December 22, it was like a $16 to $18 stock, and now it's almost $180 stock. It's one that almost no one's heard about, but it's just really been a huge performer. Look how many times it's gone below the 50-day, not very often. Looks like it's on a comeback run right now.
This is insane.
That's a textbook chart.
I'm just drawing some extra lines for some basing, but pretty much it's on a second base right now. Why I say this is a second base, this is 1, this is 2.
Would you have pattern recognition?
It does not hit my pattern recognition. I know it's on. Yeah.
No, click on the little cup with handle icon next to the print icon. There, click on that.
Oh, what the heck?
And then it'll tell you what stage base it is.
That's
I
a
think it said 4. If I remember, you were there just for it says 4.
Interesting.
Look at the estimates for 2025.
It's 2,000%. What are they selling? Are they fine?
I mean, if you look at from December 22 to now, that's a 10 bagger. It goes from 18 to 180.
Could we even have bought this? The low was 14.29. Does that make 20%, 30%? High is 19, 3%. Yeah, that's buyable. 20, 30% run up, get into a little consolidation, almost a flat base. That's insane. All that SpaceX, but the parts that supply SpaceX is just having a field day right now.
Floyd, did you trade this?
I did trade this, but I'm not in it now.
What do you think you're going to do with it?
I'm looking more long term.
Right. It also sort of depends what your basis is. If your basis is around 20, 30, 40, you can stand to let it move around a little bit. If your basis is 150, then you're nervous right now.
Yeah. Like you bought in this like 3 weeks tight, right above the breakout. Oof. That was a hard hole.
Well, if you look at the up down and the accumulated distribution, in addition to the earnings, and then also look at the sales on the projected. Yep.
Wow.
Number of funds is up. Cash flow is way up. 465. So.
Wow.
Huge return on equity.
Yeah.
Absolutely phenomenal. But this should have been in my chart on 2024 stocks too to look at.
Something must have changed right where you're at compared to it was trading wide and loose, and then right there, right in that area, it took off.
But if you look up there where it says headquarters New York, and then on the third line it says 9/30/24 includes 9.3 million net charge, acquisition and transaction expenses.
Maybe.
I don't know, but it's been a most amazing stock that most people have never even heard of. And if you look at that monthly chart, that thing's going up at better than a 45-degree angle.
Oh my, hold on.
Can I ask a question, Hailey? On the weekly chart where it shows the short interest, what is considered a normal short interest?
That's very low.
It's very low. If it's 2, 3, 4, 5, 6, that's fine. Once I see like 10, 15, I'm like, whoa, short interest. I think Tesla always has like a large. Oh wow, no, Tesla has nothing.
Oh wow.
What's the late stage based on FTAI, a flag at all?
Yes, they were trying to buy a new position. I think typical Bill O'Neill will say buy the second or third stage is the most safe. But they will also say that it's like, how do you count your bases? This is what market surge counts. This could be at least a third stage base. So yes, be careful, but who knows? It could keep going. There's plenty of stocks I've seen where it's went to 7 or 8 stage bases, and it does happen.
I was in Nap 11, and if you go to look at that, you'll see similar to what we just looked at with FTAI. Look at the bump from 2023 in earnings per share up to 2024. Up-down ratio again in accumulated distribution. Now, that's waned off a little bit over the last several weeks. Same thing, cash flow. See, cash flow for me, I look at all the time. And again, the sales into the last 4 quarters, their estimate just continues at the bottom there.
Yep.
If you see stuff over 20, 25 and up, and especially with increased earnings.
So Hailey, you're a tech guy. Tell me what it means. So it develops mobile app ecosystem by helping developers and market, monetize, analyze, and publish their apps. What the heck does that mean?
Pretty much just says, hey, Floyd, I know you own an oil mining business and you have a lot of clients who are for producing. Let me make an easy user interface for you so you can share with your clients. So they can see on their phone instead of just using the website.
Oh, okay. Okay.
That's what Rogan does.
So, this thing has run up so high and now it's consolidating. The projected earnings increase is 47% with a green up arrow. And the green up is the analysts that recently increased their forecast for earnings gain.
Yeah. So one last talk, everyone. I'm just doing a time check, about 4 minutes left of our session together. One last talk.
CLS? Same type of stock. Look at the numbers. Not quite as much on the sales projected, but those aren't always correct. Sometimes they go up over time. Up-down ratio, accumulated distribution, cash flow.
It's beautiful.
And it's not really a base, but it's breaking out over its all-time high.
Institutionals.
Yep.
So, Contra Fund just took a position last quarter. It's a finder position.
Yeah.
But that's still a position. Oh, when I say finder position, it's Fidelity Contra Fund. It's like when it's 0.02%, it means they just want a little taste of it. Sometimes adding to it, sometimes they don't. If it's at 1% for a Fidelity Contra Fund, that's a pretty sizable screen. Pretty sizable. So it's not huge into Tesla yet, but you see anything with 1%, like this dude, American Central Fund 6.5, that's insane. But
Hey, I'm going to cheat. I'm going to ask you to do one more. MSTR. I want to know what you think about. It's consolidated here recently, and I read an article where they're trying to borrow enough money so they can buy every single Bitcoin that's out there. How is that possible?
you can't. Some Bitcoin has been lost to the abyss. I've mined Bitcoin since like 2012. And it's like I've lost my hard keys to some of the stuff I've mined. It's I buy everything. And there was a point in time in crypto where people have owned more than 50% of crypto, and that's a trouble because it's based on community. And if you own more than 51% of the community, you can just say, hey, this is the actual history, and you can push stuff through. And that's why crypto is supposedly pretty good because the whole community.
Well, this was one of your high flyers that you mentioned earlier tonight, what would you do with it now if you don't own it?
So what do I do? Pretty much just watch for it. So I like buying early basis. So 543 is not a place I would buy at. Most likely, I'm starting to see a lot of overhead supply right over here at 440. So what I would do, I'll put alert around 440 and see, once I see the ping, and I'll see, do I have space in my portfolio to add this guy? How's the market? Then I'll go from there.
Okay. Thank you.
You're welcome.
It was a great presentation tonight. I appreciate the time you put into it, Hailey and Gary, your presentation, and for everyone participating. You know, we had a great group out there. I'm going to be posting the recording and the slides that were used tonight. Probably post that no earlier than tomorrow afternoon and hopefully no later than Saturday. And if you're a active member of the Anchorage IBD group, you'll get an email from me that has the links to the recording and links to the slides. Thank you, everyone, for participating. And Hailey's going to be taking a bigger role in the meetup as we're in this transition phase now, as I sort of ease out after been doing this for 15 years. And we're going to have a very able leader here and new energy, new blood, a much better understanding of tech issues than I have. And I think it's going to be great. And occasionally he might even ask me to come in and say hello, and we'll see how that goes.
More than please come in as often as possible.
But I hope everyone had a great 2024. The market gave us a huge amount of opportunity in 2024, and review your trades carefully. Do some forensics on your trades you did in 2024. What'd you do great? What could you do better on? What mistakes do you not want to repeat? And let's look forward to a fantastic 2025. There's a huge amount of opportunity in our capitalistic system and with online trading, with no commission. There is just some beautiful opportunities out there, and I wish everyone the best of success in 2025. So everyone have a great evening, and we're going to sign off, and good night. And again, thank you, Hailey, and thank you, Gary, for the presentation and all the great questions too. We'll sign off, and thanks everyone.
Happy New Year.
Thank you.
Happy New Year.
Gary.